Ladies and gentlemen, good day and welcome to India Pesticides Q2 FY26 earnings conference call hosted by Dolat Capital. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Viral Shah from Dolat Capital. Thank you, and over to you, sir.
Yeah, thank you so much. Good afternoon, everyone. On behalf of Dolat Capital, I would like to thank the management of India Pesticides Limited for giving us the opportunity to host their Q2 and H1 FY26 earnings conference call. From the management team, we have with us Mr. Anand Swarup Agarwal, Director, Mr. Vishwas Swarup Agarwal, Director, Mr. D.K. Jain, Chief Executive Officer, and Mr. S.P. Gupta, Chief Financial Officer. Without further ado, I would like to hand over the call to the management for their opening remarks, post which we will open the forum for the Q&A session. Thank you, and over to you, sir.
Thank you, Mr. Viral. Good afternoon, ladies and gentlemen, and welcome to the Q2 FY26 earnings call of India Pesticides Limited. Before I begin, I want to take a moment to condemn the recent terror attacks. Our hearts go out to the families of the bereaved, and we stand in solidarity with everyone affected by the tragic incident. Friends, when we spoke in June this year, we had laid out a clear roadmap for the year. I am happy to share that we are delivering exactly in line with what we have committed, and in many areas, we are moving ahead of our own expectations. The strength of our execution and the consistency in our performance truly reflect the discipline with which we are preparing your company for long-term global scale. Let me start by touching upon how we are tracking versus our guidance. For the year, we have guided revenue of around 1,000 crore, and with 56 crores already achieved in the first half, 565, we are comfortably on track, supported by the recovery we are seeing in key export markets as well as the domestic market. On margin too, we continue to deliver well. Against our guidance of 18-20%, we have already achieved 18.6% in HY1, backed by better utilization, operational discipline, and improved cost efficiencies. On the CapEx side, out of the planned spend for IPL and Shelby, we have already deployed 52 crores, and the rest of the projects are progressing smoothly as per schedule. Utilization has been a key theme for us this year, and I am pleased to share that technical utilization has moved up meaningfully to over 73% as global destocking eases and demand visibility improves. Our CRDMO engagement is also progressing well, with several global innovators in active discussions with us. Now coming to the performance of the quarter and the half year, revenue for H1 grew 26% year on year. EBITDA for the half year stood at 108 crore, up by 53%, with margins at 18.6%. PAT grew 48% to 67 crore. We continue to remain a zero-debt company, funding all our growth through internal accruals. Beyond the financials, we have been strengthening our business fundamentals with a sharp focus on export. Over the last few quarters, our team has been meeting customers more frequently across Australia, Europe, North America, and South America, understanding their needs, expanding the market for our molecules, and working with key partners to secure a large share in high-potential products. This combined approach, deeper customer engagement, and future-ready facilities positions us to respond faster to global demand, improve supply chain efficiency, and strengthen our competitiveness in international markets. As we scale, we are equally committed to the vision of Atmanirbhar Bharat. We continue to invest in Make in India capability, reduce external dependencies, and deepen our integrated manufacturing footprint so that the company becomes even more resilient and globally competent. Our investment at Shelvis continue to progress strongly, and the team is actively identifying and developing specialty molecules. By next year, we expect Shelvis to contribute meaningful with around 100 crore in revenue, strengthening our specialty chemical roadmap. On the domestic side, the extended monsoon has set up a very encouraging environment for the Rabi season. Moisture level and sowing conditions across key belts are favorable, and based on general movement and activity on the ground, we expect the second half of the year to be strong as well. Our strategic projects are also moving ahead as planned. Our formulation capacity has now scaled up to 10,000 metric tons. Our backward integration project for 2,6-DA at Sandila is progressing well. Looking ahead, we continue to remain deeply focused on our long-term vision for the company. As shared earlier, we are working towards scaling IPL to a revenue of 3,000 crore by 2030, supported by our integrated manufacturing model, backward integration, investment in specialty chemistry, and a sharper global footprint. Our commitment to Atmanirbhar Bharat and Make in India mission is central to this roadmap. We are consciously reducing external dependencies, strengthening domestic capabilities, and building a manufacturing ecosystem that is globally competitive yet rooted in India's self-reliance story. The long-term plan guidance every strategic decision we take, and we are confident of achieving it with discipline and consistency that IPL has always demonstrated. Taken together, improved export traction, a favorable domestic cycle, rising utilization, and the progress across our strategic initiatives give us full confidence in meeting our full year revenue guidance of about 1,000 crore with margin as promised in the 18-20% range. Our focus remains on innovation, operational discipline, in building a globally competitive and resilient organization. Thank you. Thank you for joining us today, and thank you for your continued support. I pass it over to our CEO, Mr. G.K. Jain.
Thank you, sir. Good afternoon, ladies and gentlemen. I take this pleasure in welcoming you all to the Q2 FY26 earnings conference of India Pesticides Limited. Let me begin with a brief update on the industry scenario. The global agrochemical sector is showing early signs of recovery driven by volume and an uptick in demand across key international markets. While the domestic environment was impacted by heavy monsoons and challenges in the pesticide application cycle, we observed resilience in our core export segments, which helped offset headwinds of the domestic market. In quarter Q2 FY26, we achieved ever highest total revenue of over rupees 295 crores, which is a 26% YOY growth. These outcomes reflect our disciplined execution and strategic focus on long-term value creation. EBITDA for the quarter was rupees 54 crores, up 37.6% YOY, with margins expanding to 18.3%. Our net profit increased to rupees 32 crores, a 22% increase from last year, with a PAT margin of 10.7%. Export sales nearly doubled to rupees 140 crores, supported by improved offtake in Europe and Australia, while the domestic revenue remained at rupees 150 crores. During the quarter, we marked a significant milestone in capacity expansion. Our formulation facility annual output increased from 6,500 to 10,000 metric tons. In addition, our board approved a backward integration project at Sandila for producing 4,000 metric tons of 2,6-DEA, which will strengthen our supply chain and reduce our dependence on import and will also help us in our margins. Our CapEx plans are being executed as per projections. Our R&D-led innovation strategy remains aligned with the launch and scale-up of differentiated high-value molecules, further strengthening our competitive position. On the sustainability front, we made significant progress through our flagship CSR initiatives like Chuppi Tod Halla Bol, Samagra Sudhar project, and Nirmal Jal Pariyojana. Looking ahead, we remain optimistic, supported by the consistent momentum in exports, gradual recovery in the domestic market, and the positive impact of our ongoing capacity expansions. Our diversified product portfolio, integrated manufacturing value chain, and continued emphasis on operational improvement position us well to maintain this growth trajectory and create long-term stakeholder value. Thank you very much. I now invite our CFO, Mr. S.P. Gupta, to take you through the financial details of this quarter. Thank you.
Thank you, sir. Good afternoon, ladies and gentlemen. Thank you for joining India Pesticides Limited conference call to discuss Q2 and H1 FY26 results. Taking you through the financial highlights for the quarter and half year. For the quarter 2 FY26, total revenue was 295 crore with a 26% growth over Q2 FY25. EBITDA was 54 crore, up 37% YOY, with margins increasing to 18.3% from 16.6%. Net profit reached 32 crore, up 22% with PAT margin of 10.7%. The margin improvement was driven by better operating leverage and ongoing cost efficiencies. For the half year ended H1 FY26, total revenue was 579 crore with an increase of 26% as compared to 459 crore in H1 FY25. EBITDA increased to 108 crore, an increase of 53%, supported by higher gross profits and improved operating efficiency. Net profit for H1 FY26 was 67 crore, an increase of 48%. On geographical mix, export revenue increased to 140 crore, nearly doubling from 74 crore in Q2 FY25. International market is showing signs of recovery and inventory levels are normalizing across key geographies like Europe, USA, Japan, etc. Domestic revenue was 150 crore, marginally lower as compared to Q2 FY25 due to limited pest infestation caused by heavy rains washing off the pest. In terms of revenue mix, technical and API accounted for 66% and formulation 34% in Q2 FY26. Capital expenditure of 52 crore has been planned in IPL and 64 crore in 100% subsidiary. Both are progressing as per schedule. Return on capital employed improved to 18.8% in Q2 FY26 from 17.6% in Q2 FY25, reflecting a focus on capital efficiency. We have healthy net cash and cash balance of around 80 crore. Working capital days have reduced significantly from 255 days as at 31st March 25 to 174 days in September 25. With a strong order outlook, expanded capacities and stable raw material pricing, we are positioned to continue our growth in the coming quarters. With this, we would be happy to take your questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Vidisha from CRK. Please go ahead. Excuse me, Vidhi. You there? Excuse me, Vidhi. As there was no response from this participant, we'll move on to the next one. The next question is from the line of Maitri Shah from Sapphire Capital. Please go ahead. Hello, Maitri?
Hi, yeah, I can hear you.
Yes, you're
Am I
audible. Please go ahead. Yes, please go ahead.
Yeah. I have a few questions. So firstly, on the export side, we've seen our sales double from 74 to 140 crores. Going forward, what do you see the contribution from export sustaining? Do we see the 48% contribution remaining at this level for the next 1 to 2 years, or do we see it going down a bit from the next quarters once the domestic demand again kicks in?
Madam, for this quarter, it was 48 crore, but our medium-term target is around 55 to 60 crore, 60% domestic and around 40% export mix. And export demand in key geographies like Europe and Australia and Japan, we have good order book from these geographies.
Okay. Do we share our order book figures? Do we have the order book number, if we could share that? Also the split between domestic and export?
Yeah, that can be shared, madam. No problem. We already have published that, so we will share with you. No problem. You can contact our company secretary. He will send you.
Okay. Okay. Also, you mentioned that we have a 3,000 crore target. When do we plan on achieving that? FY29 or FY30?
This is FY30-31. That's what we have planned, and we are progressing towards that. Yes, that is a long-term vision. But short-term wise, now this year we have planned for 1,000 crore revenue, for which we are on track.
Okay, and what sort of capex do we need to put in place for reaching such a 3x growth in our revenue? Also, what sort of split do we expect once we reach there from formulations going forward? And also the margin profiles would look like once we reach those revenue numbers?
No, we are working constantly to maintain our margins in the range of 18 to 20%. That is what we are aiming at, and we are working on that. We are already achieving these. And of course, there will be increase in our formulation as well as technical manufacturing capabilities at our new site under Shalby's, what we are taking and further expansions on that. So that is a long-term project what we have undertaken for FY30 and 31 to reach about 3,000 crore revenue.
Okay. And the new backward integration project that we are putting in for 65 crores, what sort of margin accretion can we get from that project for the 4,000 metric ton and the 20?
Yeah, please, madam, that is more of a strategic nature in the sense we want to reduce our dependence on the import of this material, because we are already making the integrated molecules from this. So it will reduce our dependence on import. as well as it will help us in increasing our overall margins of the product. Because we will not be selling this product in the market, but we would be utilizing primarily for our in-house production of further intermediate and the final product from this.
Okay. And so this 4,000 metric ton is it totally the utilization is only this much, or do we need further backward integration, or to increase more of this project for our capacities, or will like
It will be more or less, it should be equal. Maybe if required some shortage is there, then we can buy from the market, but otherwise I think it will meet our requirements.
Okay. Yeah, that is it from my side. Thank you and all the best.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management will be able to address questions from all the participants in the conference, kindly limit the question to 2 per participant. Should you have a follow-up question, please rejoin the queue. The next question is from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
Thanks for the opportunity and congratulations for a great set of numbers, given the tough environment the industry is going through, especially on the domestic side. So, sir, we have seen quite a few technical as well as formulation players reporting subdued numbers during this quarter, impacted primarily by domestic markets where the excess rainfall has impacted the overall sales. So, can you share your views on how we have outperformed the market, especially in domestic market where our sales haven't grown, but they haven't declined also compared to other players, like what the growth other companies have seen. And secondly, on the export market, how is the export market doing? Because we have doubled our sales in exports. So if you can talk about the export market pricing and the overall demand.
In export market, there is a demand increase. We are getting increased inquiries from our customers. And number 2, we have visited a lot of our customers in their factories and offices across the world, including Australia, Europe, USA, etc. And that has given a more personal touch to the business, and that's how we have got increased orders from our various customers across the geographies. That is number 1. Number 2, of course, we have to be cost competitive when compared to other manufacturers. So we have been able to do that by slightly improving our efficiencies in our production as well as the raw material consumption, so we could meet their cost requirements. And we hope that next year also it will continue in the similar way. And in the domestic market, though there was the impact of the heavy monsoon across India, initially we had sold some quantities, and the last part, there was some impact. But we have increased our bulk formulation capacity. So our bulk formulation has helped us in maintaining the overall revenue more or less at the same level as last quarter.
Sure. Sir, for FY27, Sherwin also coming in our expansion also there in the standalone company. So how should we look at next year in terms of growth and margins?
Which one, sir? Which one? Could you please repeat?
FY27 with our subsidiary also commencing operation, and sir, as Anand sir also said that will be looking to do revenues of around 100 crore from the Sherwin. So how do you think overall as a company on standalone as well as on standalone basis, how do you see the overall growth of the company, like on a consolidated basis?
Yeah. No, our subsidiary is also coming up well. Initially it took little more time because we have to build the infrastructure part, and then slowly now we have started with the production of one of the molecules. We have, in a small way, we already started technical grade production, and we want to add more number of molecules this year as well as next year. And we feel that 100 crores next year is a very reasonable estimate. And on a standalone basis, it will also grow more or less to our Sandila site, because the plant size is more or less same, almost 25 acres of land, and we will be building there block-wise. Every year we will be adding 2 to 3 blocks. So on its full realization, in 3, 4, 5 years, we should be able to achieve almost 1,000 crores from there.
So, no, but FY27 standalone should we expect will reach 1,200 crore next year, and 100 crore will come from Sherville, 1,300 crore top line on a consolidated basis?
We expect at least 20% growth over this year.
On standalone also?
On standalone also, yes.
Okay. And sir, how should we look at revenues, margins next year?
Sorry to interrupt, Ankit. Sorry to interrupt. If you have a follow-up question, please rejoin the queue, as I have announced for limit questions. Yes, please. Thank you. The next question is from the line of Anil Jain from Grow Wealth. Please go ahead.
Yeah, thank you for the opportunity and congratulations for excellent set of numbers in such a challenging environment. Sir, our exports have risen quite dramatically from 74 crores to 140 crores. So the contribution from technicals and formulations in this 140 crores, what would be the contribution?
And here primarily they are technical material, and some part of it is by bulk formulation. We don't export ready to use formulation in our own brand, but we formulate for our customers. So some of our customers, instead of buying technical, they are buying formulated products in bulk. So it is a combination of this bulk formulation and technical.
Okay, sir. And this capex which we are doing 116 crores, out of which 52 crores has already come. So when it will start contributing?
This will certainly contribute in next financial year, sir. No problem.
Okay. And sir, this 21 new registration which you have done in FY25, what was the expense incurred for that?
That probably, please send your number, we will get you back to you, because really I don't have the numbers on hand, but we will come back to you on that.
But what should you
registrations? Look, it depends upon, for example, each Indian registration in India, for example, for CIB registration for technical grade material, normally the expenses is about 7 to 8 lakhs. And for the formulation, it is about 25 to 30,000 rupees. But for export, the registration in another country, there the expenses are high, because we have to develop the complete five batch, etc. So that will be accounting almost about 25 lakhs, around 25 lakhs each registration. That is a very rough indication I am giving you. But exact number, if you want, I will send you by mail.
No, it's okay, sir. Sir, and our capacity expansion from 6,500 metric ton to 10,000 metric ton undertaken at an expense of 2.8 crores. At 10,000 metric tons, what would be the revenue, sir, at full utilization?
Revenue size, it will be around 400 crores, 10,000 tons formulation capacity.
400 crores.
400 crores, yes.
And what would be the total formulation contribution of the total company, sir? At 100% utilization?
Currently, the contribution of formulation for this quarter it is 34%, but on an annual basis it is around 27 to 28% last year.
No.
It will be slightly more. This year it will be slightly more, because we are doing this bulk formulation for some of our customers.
Yeah, I heard it, sir. And you told that you were able to sell some more bulk formulations. That's why the revenues have not been impacted.
Yeah.
I think is this sustainable for the ensuing quarter also?
Yes.
Okay, sir. Okay. Best of luck for such a good set of number, and best of luck for the future, sir.
Thank you. Thank you so much.
Thank you. The next question is from the line of Ajay Desai from SJ Enterprise. Please go ahead.
Yeah, good afternoon, everyone, and congratulations on putting such a great set of numbers. Sir, I have only one, question. This is regarding not about the business, but about the valuation which market is still unable to recognize for the organization. And we came out with our FPO in 2021 with certain valuation, which resulted in a price discovery of 296 rupees, and still market is unable to recognize the valuation of the organization, and it is quoting 30, 40%, 50% less. So why don't we come up with a buyback offer and give signal to the market that the valuation is which organization feel is way higher, and at least some portion we can do a buyback from the IPO, which was a combination, and 95% of the IPO was towards follow-on public offer from the promoter side. So we need some clarity on this.
Actually, we have a lot of, we are seeing a lot of opportunities. So we have lined up good amount of capex out of our internal accrual. But still, we will discuss internally or suggestion that some portion we may reserve for buyback also.
Sure, sir. Because I requested this 2-3 quarter back also, because we need some sign of some signals we need to send to the market about our undervaluation, because the whole market in the last 4 years between 2021 to 25 has multiplied, but somewhere we are at a loss of 30-40%, which is giving pain to the investors.
But sir, buyback will probably whatever the surplus we have, if we utilize that in increasing our business by increasing our assets and the production capacities, that will create more value to the company.
Sure, sir. So ultimately, market valuation has to be, market has to recognize, or we can create our visibility more in the market to make sure that there is a proper, for the investors, retail investors.
That is a good suggestion. We will really certainly look into that to create more visibility, to meet more investors and have more conferences. So that is what we will try to do, certainly, sir. That is true. And the valuation will certainly come, because once the people recognize the importance and the goodness of the company, valuation will automatically come.
Yes, sir. Sure. Only thing is, like, because it was a FPO and the whole money, 90% money went to the promoters, somehow that has to get reflected. Otherwise, retail investors like us will be at a loss. So, yeah.
That's true.
Thank you so much. Yeah.
Thank you.
Thank you. The next question is on the line of Manish Bhadane from 360 ONE Capital. Please go ahead.
Thank you so much for the opportunity. As you mentioned in your opening remarks that you want to achieve the 3,000 crore of revenue by FY31. So, I want to just understand that what is the roadmap for that?
We could not get the. Please repeat.
So I'm just asking that, as you mentioned in your opening remarks that you want to achieve the 3,000 crore of revenue by FY31. So what is the roadmap for that?
See, we have a clear roadmap in the sense we have lined up a lot of products in our portfolio, and we have our subsidiary salaries coming up at a good pace. So that will contribute significantly. And apart from that, we are looking at some other opportunities to increase the total revenue to the estimated figure of about 3,000 crores.
Okay, okay. And my second question is that, in the second quarter, like a lot of companies saw the formulation data in the second quarter. So, like, what percentage of product returns we saw in the 2Q?
Sir, we are getting some resounding. We are not able to hear you clearly.
Now I'm clear. Hello, audible?
Yeah, please. Talk little slowly.
Yeah. So what I'm asking is that in the second quarter, a lot of companies saw the formulation data as a percentage of sales. So what sort of percentage return we saw in the 2Q?
Percentage of formulations in our total sales.
Yes, exactly.
Yeah. It is about 34%. 34% of our products are being sold as formulated products, and rest is including bulk formulation, and about 66% is technical grade material.
No, sir. I'm asking about the returns.
Return is more or less same. I think formulation is slightly less than technical. 150 basis points less than technical.
Oh.
Thank you. The next question is from the line of Ankit Minocha from Adize Ventures Family Office. Please go ahead.
Yeah. Hi, good afternoon. If I look at your margins for EBITDA margins for H1, they have been hovering around 18.5%. Now, considering that H2 you have a lower base of sales, and considering the market scenario, do you think for H2 this margin would be maintained in this 18% odd level, or could this be going lower?
No, it will be maintained, sir. It will be maintained irrespective of the sales revenue, but it will be maintained between 18 to 20%. That's what we are trying our best.
Okay. Considering the new plant is also coming up and you have expenses related to that, which will kind of slowly fill up the capacity and everything. So don't you think that this would slightly have a negative impact on the margins?
No, actually, our incremental sales will be only 15 to 20% we are projecting. So 80% the margins they are stable. Even for our future incremental sales, we are doing backward integration also. So we are quite hopeful that we will in that range only.
Okay, understood. And for 27 and FY27, what would be your understanding of what could be the sustainable margin for FY27?
Yeah, 18 to 20%. It will be in that range only.
Okay. Thank you very much.
Thank you. The next question is from the line of Saket Kapoor from Kapoor & Co. Please go ahead.
Namaskar, sir. Hope I'm audible clearly.
Yes, you're audible. Please go ahead.
Yes, sir. Yes, sir. Thank you, sir. Just a small clarification. Gupta ji, आपने sales return बताया 1 to 1.5% of the sales. That is what the sales return is generally.
Sales return?
Yes. Sir was mentioning some percentage about sales return.
No, I was mentioning margin profile of formulation is slightly less. Say, if for technical it is 19%, so then formulation will be around, say, 16% margin, EBITDA margin.
Sir, in our crop protection segment, we have sales return also that needs to be factored. So, as a percentage of sales, how much have been the sales return for the quarter and the first half and the comparative number?
Yeah, but sales return, they have been accounted for. They are normal only. Our sales return is normally 5 to 6%. So it has been accounted for half year, and it will be accounted for in future also. Nothing abnormal happened this year.
Okay. Sir, when we look at our quarter-on-quarter, the revenue has grown from 275 to 290 crores on a consolidated basis, and we have attributed export to be the major contribution. But there is a margin contraction as the profitability remains flat quarter-on-quarter. So what explains this contraction in margin, sir?
In first quarter, we have other income of more than 2 crore in insurance claim. If we exclude that figure, so we have inched up slightly only. Margin, this is as per our projected margin of 18% we are achieving.
Okay. Sir, and lastly, sir, in the cash flow segment, when we look at the consolidation from cash generated from financing activities, we find a mention of rupees 16 crore from proceeds from initial public offering for this quarter, sir. What is this pertaining to?
Pardon? Yes.
Sir, in the cash flow, when we look at the consolidated part, segment cash generated from financing activities, सर इसमें हम प्रोसीड फ्रॉम इनिशियल पब्लिक ऑफरिंग दिखा रहे हैं कंसोलिडेशन में इस फर्स्ट हाफ के लिए, दैट इज टू द ट्यून ऑफ 16 करोड़.
Financial activity. No, I mean still. No, this is I think wrongly written. We have not. We have.
Yeah, that was the reason, sir. Yeah.
We have taken a small loan for our subsidiary term loan. So I think that is the figure of small borrowings. We have long-term borrowing. You are right. It is wrongly mentioned. We have to. This is initial public. This amount has been invested by India Pesticides Limited in our subsidiary as a convertible preference share. So instead, it is not initial public offering, but it is convertible preference share taken by India Pesticides Limited in its subsidiary.
Okay. And what was exactly the nature of the transaction? Can you dwell further?
India Pesticides will be regularly investing in its subsidiary for its expansion project. So this figure will regularly keep on coming, investment from India Pesticides Limited.
Okay. Right, sir. And sir, lastly, sir, we have seen that as per the nature of the industry, H2 generally seems to be softer than what H1 is. So does that plays out for our company also, or we have a differentiating a model for the same?
In first half, generally our turnover is 55% and second half around 44 to 45%. This will happen this time also. In first half, this domestic market contributes significantly. In second half, domestic market only Rabi season is there, so contribution is less. But our export market contributes significantly to our second half turnover.
Okay. And we see traction there to continue in the export pipeline.
Yeah. Right. Sure.
The last point, sir, was about the R&D part. As earlier also mentioned that it is the R&D thrust that determines development of molecule when they go off patent, and then introducing the same to the different markets. So where are we, sir, in terms of any a molecule getting off patent and we developing the same and then introducing the same in different geography? Any color on the same, sir?
Yeah, we are already working on many molecules which are going to be off patent, and few of them now we are already optimized the conditions on the lab scale as well as at pilot scale. And in the coming year, next year, we will be introducing at least 2 molecules from them in our subsidiary Shalini Specialties.
ओके सर, क्या पोटेंशियल होगा इसका बिजनेस रेवेन्यू पोटेंशियल?
सर उसका पोटेंशियल तो अभी बहुत बोलना मुश्किल है, क्योंकि ये थोड़े नए मॉलिक्यूल रहेंगे, तो बट इतना बता सकता हूँ कि वट एवर इन्वेस्टमेंट वी विल बी डूइंग फॉर दीज 2 molecules, we will be getting a revenue of at least 2 times the capex.
जी सर, धन्यवाद सर आप सभी सदस्यों का सर फॉर आंसरिंग एंड ऑल द बेस्ट टू द टीम. धन्यवाद.
Thank you.
Thank you. The next question is from the line of Anil Jain from Grow Wealth. Please go ahead.
Yeah, sir. Congratulations for such a good export turnover. And sir, basically, the ambitious and very good target of 3,000 crores by FY30 or 31, all this would be coming from internal accruals, all the expansion?
We may take nominal loan for our subsidiary company, but it will not be more than, say, our debt equity ratio will not, it will be less than 0.1 on consolidated basis also. Maybe 100 to 200 crore loan we may take for our subsidiary in next 4 to 5 years.
That means more or less it will be coming from internal accruals.
Yes, mostly coming from internal.
That should be a very ambitious target, sir. If we can achieve it, that would be like nothing.
Sir, we will try our best. That's what we have aimed at.
And sir,
we have done lot of spade work. We have done lot of meetings, and we are quite confident that by that time we would be very near to that target. So that is our goal, and our team is working day and night for achieving that target.
And sir, our exports looks like they have gained tremendous momentum. I think we may really surpass our export turnover, I think so.
Yeah, because out of our whole turnover, we want to have at least 40 to 45% as exports. So we have selected molecules. Some of the molecules are export oriented and some molecules are domestic oriented. So it will be a mix of domestic as well as exports.
But to double the turnover from in one quarter, it looks as if we have gained tremendous momentum, and I think and it has just started now, and the second half is quite better for the exports, and even the government is promoting more exports. So can we beat the targets in this year also?
Yeah, certainly this year whatever target we have established, we have aimed at 1,000 crore revenue. So we should be able to achieve that or even at least surpass it.
Oh, thank you for answering all the questions, sir, and best of luck. Bahut dhanyawad.
Thank you. Thank you. Thank you very much.
Thank you. The next follow-up question is from the line of Vidisha from CRK. Please go ahead.
Hello, sir. Are you audible?
Yeah.
Yes, please go ahead.
Okay, sir. So with the anti-dumping duty on plates, I want to know if there is any increment in the margins that we are realizing.
No, with this addition of anti-dumping duty on one of the intermediate and the technical products, now we are able to get a reasonable return on that. Earlier we were losing money on that, but now we feel that we should be able to make some margin in that.
Okay, sir. Is it possible to quantify how much increment in margins has it led to, or an increment in sales?
EBITDA margin is our normal, this 18 to 20% EBITDA margin. What we are making other products, we will be making in this product also.
Okay.
And sir, the paid-up plant expansion to 8,000 metric ton, can you confirm the revenue contribution that the whole 8,500 metric ton will have?
Yeah, sir, madam, the capacity would be 8,500, and if you utilize even the 75% capacity, then, and because it is a seasonal product, so we feel that it will contribute significantly to our revenue, and we should be able to get this complete capacity utilization by next year.
Okay, so at 75% utilization, can we assume 250 to 300 CR revenue?
Roughly, I can say.
Okay. And sir, the Harimpur project, so you said 64 CR is the capex cost. So this is how many blocks, and what will be the revenue per block approximately?
Look, I could not get what exactly you are meaning.
In the Shalvis Hamirpur project, you said 64 CR is FY26 capex. So I want to know how many blocks are you setting up right now, and how many blocks are in line, and what will be the revenue contribution from each block?
Presently, one block of technical grade insecticide and fungicide is under construction, which we will be commissioning shortly. And once semi-commercial pilot plant we have constructed, which is now starting, and we have already started making small quantities of one of the product. And we have the other block, the designing is complete and that work is under construction. So we feel that from these two blocks, we should be able to get a revenue of about 100 crores next year.
Okay, understood, sir. And so just one last question. This SEDA expansion to 8,500 metric ton, 8,500, it was supposed to come in quarter 2. You said by September, October, and last fall. So when can we expect that to come in?
It is in very advanced stage of construction. There has been, because of the heavy monsoon in the last 2 months, in Lucknow, there is slight delay in that, but it will be another 15-20 days. It should be on stream.
Okay, sir. Just one last question. So this 1,000 CR revenue target for FY26, can you give me a split? How much of this are you expecting from the existing facility versus the new facility that has come up?
This is primarily from our existing facilities at Sandila and Lucknow, and our new facility at Shalvis that will start contributing next year onwards.
Okay, that's it from my end. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Pankaj Agarwal as an individual investor. Please go ahead.
Hi, good afternoon. My question is with respect to the inventory days and debtor days. What is the current status and where we are going to land in FY26? And there seems to be a decoupling in timeline of profit versus revenue. So what are the steps being taken to improve the cash conversion cycle?
Not able to hear properly. Could you speak little slow?
Okay. My question is with respect to receivables, inventory days, and the debtor days. What is the current status and where we are going to land in FY26? There seems to be some decoupling of profit versus cash receivable. So what are the steps being taken to improve the cash conversion cycle and reduce the receivable days?
Our net working capital days has already declined significantly from March 25, and we will further be reducing our inventory days by at least 20 days by March 26. We will also work on our receivable days. They will be reduced by 10 to 15 days by March.
So there is a scope for 25 to 30 days reduction further.
That's it. Thanks.
Thank you. The next question is on the line of Naitik Mohta from Sequit Investments. Please go ahead.
Good morning, sir. Thank you for the opportunity. So my first question is regarding the bulk formulation sales that we have done in the quarter, and as a result, our exports revenue has gone up. So what is the nature of these sales? Are these sales repetitive in nature, or are there some one-time opportunity that we might have gotten?
No, it will be, we feel that we will be getting regular orders on these bulk formulations, because some of our customers, they have shown interest that instead of buying technical, they would prefer to buy a bulk formulation so that it reduces the cost of formulation abroad. So we are creating facilities for increased bulk formulations.
Oh, okay, sir. So my second question would be on the side of Pretilachlor. So I think we did 55 crores sale for Pretilachlor in quarter one. What would that number be for quarter two?
No, because this is a very seasonal product, and normally Pretilachlor gets sold only in up to June. So second quarter there is hardly any sale. But now from third quarter and fourth quarter onwards, there will be sale of the intermediate as well as of the bulk of the technical material. Because normally it is being used in June, July and August. So the technical sales are mostly up to June. July is hardly anything. Very insignificant numbers in July.
Okay. So for FY27, what could be the number look like for like the intermediate and the Pretilachlor product as well together?
FY27 figure, I think we should be 250 or 250, minimum 250 crores.
Oh, minimum 250 crores. Okay. Okay.
Yes.
Thank you, sir. I'll get back in the queue.
Thank you.
The next question is from the line of Anil Jain from Grow Wealth. Please go ahead.
Sir, with all the backward integration which we have done in the last so many years, and particularly this year, have we gained market share from China or people sourcing from China?
Yeah, certainly we have gained a lot of market share where the people were importing from China. So they are no more importing now. You take the case of this Peda itself, it was being imported, more than 90% was being imported. But now we are able to cater this requirement in India. So there is a lot of import substitution on this.
And sir, in Shalvis we are planning for differentiated products. So definitely the competition would be very less in those products, and can the margin be a little bit higher in those products?
Maybe in some products it may be higher, in some products it may be lower, but average out probably what we are estimating now between 18 to 20, we should be able to make. In some products it can be higher, but again depends upon the type of product. We are aiming at slightly higher margin, but still let us see.
But sir, you are planning for a differentiated product, so I think there is a ready market for these products.
Yeah, market is there because we are talking to our customers, and when they agree only then we go for the product. So after making the product, we can certainly start selling immediately.
Okay, sir. Best of luck. Thank you for answering all the questions. Best of luck once again.
Thank you so much.
Thank you. That was the last question for today's conference. I now hand the conference over to management for closing comments. Over to you, sir.
Thank you very much for sparing your valuable time. And if you have any more questions, you can certainly get in touch with our investor relation team. and they will forward to us, and we will be happy to send you all the information. Thank you very much once again. Have a nice day.
On behalf of Dolat Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.